Hello, everyone. This is Terry with Futures.io, and as always, I'd like to thank you for joining us today. And it's my pleasure to welcome back Anthony Drager for today's webinar, Trade Journaling with an Amazing Twist. This is actually kind of a part two, as he did one before, and he's showing some updates and new pricing. So, if you have any questions, feel free to type them into the questions box, and we'll do our best to answer them at the end of the event. If you're watching this on YouTube, please do us a favor and give us a thumbs up if you enjoyed the webinar. And as always, please feel free to share, comment, subscribe to our channel. It really helps us a lot. For trading news, events, and information, follow us on Facebook, YouTube, and Twitter using @Futures.io. And now, without further delay, I'll hand it over to Anthony, and you'll get that little pop-up again.
Well, we got Frank Sinatra playing. Let me turn him off. You guys see my screen here, my voice?
Yes, sir. Looking good. Sounds good. She's all yours.
All right, Terry. Thank you. Thanks again to Mike, Terry, and Futures.io. They do a good job, as you guys know. So before I get into what this is, some of you guys know, some of you don't, and who I am. Some of you guys know me, some of you guys don't. Let me just ask a question and share a story about trading. How many people in your trading miss a lot of great trades? Everything sets up X, Y, Z. You don't pull the trigger. Now, if nobody's raising their hand, you're deceiving yourself. We all miss trades. I've been trading for 18 years. My worst trades are missed trades. So, are there solutions to it? Well, number one, you got to get a sense of why you're missing it. There's generally a reason, and it could shift not only from trader to trader, but there's different reasons you might miss a trade within a session. It's the same individual. So let me go real quick. Let me pull this screen away and this screen away and go to two charts that the verbal journal works on. I'll get into the functionality of it in a moment. Ninja Trader 8 and 7 and 8 it works on, and Sierra charts. See Ninja here on the left, and you see Sierra on the right. Now, I put teal blue dots next to some instances where I miss a trade. I don't use Ninja. I pull it up for this, for the sake of this webinar. But like I said, my worst trades are missed trades. Why? Because we tend to do things aggressively after you miss a good trade. Why? Your mind wants to get back to what it would have felt like if you caught that winning trade. So we avenge it, we get anxious, and we start seeing things that aren't really there. And so it's really important to kind of document where the heck you're missing trades. Now, just look at these blue dots in here. I'm not going to, well, maybe I will throw a pen on it. Let me turn my news source off. The, oh, now I got a black color. Got to change that. Let's go to yellow. So what do we got? We have, this is from today's S&P session, just on a simple 5-minute chart. 3 trades that I documented that I missed throughout today's session. All right. Various reasons why I might have missed them. The whole key for me is, why the heck am I missing these trades? They aren't trades that just came out of nowhere. They're trades that my ready, aim, fire approach progressed, and I didn't pull the trigger, right? So number one, I put a ugly color on there because you could decide what color you want. And secondly, you got to first of all document it, and secondly, go back and listen to why you might have missed it. So on Ninja Trader, if I hold down Control and left click on the dot, it brings up this dialog box that I must have left a recording. And if I play it, I'm going to see if you guys can hear the recording. I'll put the mic up to the speaker. 41.5 coming out of the range, cut through 2 cranes. Don't sell it. You had your risk above 42. So I knew where I was, what I was trying to do, right? And I articulated it, and I go back and listen to why I might have missed it. And these are all those color dots. That's the kind of way to use the verbal journal that I've found from people that have used it have helped them the most. Documenting what the heck they're missing. All right. So let's go back to the slide and get into, wait a second, there we go. All right, now we're rolling. How do you miss less trades? Journaling is really difficult. I can't sit there and journal by writing. Some people can. Most people who start don't finish it. It's a really important aspect of trading. So how do you make it simple? How do you make it practical and possible for those who don't even try to start? That's what this verbal journal is all about, right? What is it? We're going to talk about how to use it and why the heck to use it. Briefly about me, I started as a CME clerk in 1996, became a Board of Trade member in 1999, couldn't make any money in the pit, was ready to quit the business, got a job at an electronic prop firm in 2000 called International Trading Group out of Chicago, and I created the verbal journal. It was an idea in 2009 and didn't get around to developing it until a couple years ago. But it was something to say, I'm missing an element of review, and how can I make it easy to do? And that's where this came about. So let's jump into what this thing is. And like Terry said, we'll leave time open for questions at the end, and I'll tell you what it's all about as far as how to get it if you're interested in it. Now, you see some of these dots on this image of a chart, right? How do you get these dots, or what happens? In Ninja, if you hold down Control and press and left click, anywhere you do that, this dialog box is going to come up, and we'll talk about what it is in a second. But after you close, you make a recording and close the dialog box, a dot will appear wherever you clicked, whether it's up here or down here, okay? What is the dialog box and how to use it? This is essentially the box that you're going to engage with on Ninja. It looks pretty similar, same functionality on Sierra, and I'll show you that on a live chart in a moment. But it gives you the opportunity to title whatever the note is going to be, to record it, to place a color of the dot that's going to be left behind here, to draw a line if you want a line to come off the dot, and then it picks up whatever mic that you have plugged in. Generally, you only have one mic plugged in, but if you have more than one, it'll pick it up and you decide which one you want. Also, what's been added to the second version of this is that it remembers the titles that you put in there. So if I put a title of potential resistance, make a recording, every time I go back, I won't have to retype potential resistance if that's the note I'm going to use again. If I type in miss trades, stop missing trades, that title is always going to be there for me to retitle it that without having to type it in, to make it easy. Okay? You always have a chance to change your color before you stop the recording. You close the dialog box and the dot will appear in the color you made it, whether or not you have a line, and for you to go back and play like I did in that example with a missed trade. I'm going to go over a couple more of those. But that's what the verbal journal is, and that's how to use it. It's not out there in the simplicity of this. Now, you know, some people will record with Camtasia and some other free recording visual, like video recording. And the problem with that is hey, good for you. If you're doing something to review, this is a performance activity. So you got to practice. You got to know what to practice. You got to know what you're doing wrong and what you're doing right. And most people are bad at documenting what they're doing right to get confidence to keep doing it, or what they're doing wrong to fix it. The point is that I used to use Camtasia in 2000 before Camtasia was even invented. It was called just a video camera, an external camera at a short tripod. In fact, I wish I had the link. I got it on YouTube. I used to record. I used to put the tripod on my desk. It was a short tripod, and it was essentially like looking over my shoulder. It was just pointing at the screen. And this is back in 2001, and I still got some of the videos. That was a way for me to go and review. The problem is I'm not going to go back and listen to 3 hours of my trading. It's not going to be clipped. I'm not going to go back and edit it either. It's a lot of work. You end up doing more work, then you get frustrated and you stop doing it. It's like if you're going to work out to get fit and your workouts are too difficult, chances are you ain't going to do it in the next 2 or 3 weeks. Too hard. You're going to make it easier on yourself so you accomplish the same feat, and that is getting and staying physically fit. Whether it's the size of your body or the size of your account, you got to get yourself in a position to be practical in your review. So I used to do that before Camtasia, and that's great. but I needed to make it easier, and everybody needed to make it easier. And this simply came from, it's one of those ideas like, why didn't I think of that? In 2009, I'm talking to a couple traders in the room, and I said, wouldn't it be cool to click on your chart and this kind of box would pop up and you could record it? And it was like, man, that would be awesome. And so that was a while ago, but better late than never. The why. Now, we talked about what it is. We talked about how to use it. We're going to talk about why the heck to use it. Because if there's no why to anything that you're going to invest in, then it's useless. And I always show, this is a similar, I'm going to talk a little differently from the last webinar based on what this thing costs. And before I show a picture, what this thing costs. And also the main feature that I've gotten feedback from the group, the first adopters that came 2 months ago when I did the first Futures IO webinar. But let's get back into the why. I always show this image of my family. Look at the circle. That's me up there. That's my father. In the lower right, my brothers and sisters all around us. And I show this picture because he told me and us growing up, if you know how, you'll have a job. If you know why, you'll be the boss. That's why the why isn't so important. Why do you get long? Not where, but why. Why does price rally? Why does price break? What's the driver? So how could this verbal journal help you? Well, first of all, it'll help you start journaling and documenting what the heck you're doing because it's simplistic. You're not going to keep writing notebooks. It's really difficult to do. And if you have the greatest thoughts in the world on paper, are you going to throw those words up on the screen to see the relevance of where they came out and what the market did before and after the thought? Missed trades. This one I can't underscore enough. Just think about if you missed 4 trades in a week, if you caught just 2 of them. How different will your account look at the end of the week or the end of the month? Let's say you had 10 missed trades during the course of a month and you just caught 3 or 4. Instead of missing 10, you only missed 6. How different does your account look? Save time. And I don't mean by journaling more efficiently than writing or typing, but saving time by going down rabbit holes to do your study and to come up with a pre-market opinion. What do I mean by that? How many people in here, they work really hard to try to create the narrative of what the market's going to do that day. And some people have like 3 or 4 reasons or 3 or 4 things that could happen. Well, why stop at 3 or 4? How about 100 different things that could happen? There's nothing wrong with doing some homework and coming up with an opinion, but there is something wrong is if the opinion doesn't matter. So I'm going to show you that if you document your opinion, if you have one before the day starts, put a certain color on it, go back on a daily and look at whether or not your opinion has any relevance, if it's important. If it's a blue dot at the beginning of a session and that's your bullish opinion for the day, does the market rally? If it's red, does it break? Is it random? So could you save yourself time and saying, whatever I'm doing to come up with this opinion, it doesn't matter. Or your opinion is usually when you have one really good and you start to see it, you start to listen back to why you had that opinion. And you go, wow, why don't I have the confidence to trade on that side of the market, right? So if you're bullish coming into the session, why aren't you trading from the long side? You know, what happens? You're bullish to start the day, the first trade out of the gate, you're short. It's like, what the hell am I doing? So you'll find out if your pre-market opinion or your bias is good, you'll get confident to trade on that side. If it's not good, get rid of it. Save yourself some time. All leading to confidence. I talked about missed trades at the beginning of this event, right? We miss trades. Generally, there's some element in the description and definition of why we're missing a trade. There's some element of fear involved in it. There has to be. You're risking money. You got your opinion. As soon as you open a trade, you put your opinion out there. Not for the world to see, but for your money to see. So there's a certain amount of stress. So there's fear. How do you remove fear? You don't snap your fingers and remove it. You got to replace it with confidence. You got to replace it with something. You want to eliminate a bad habit? Replace it with a not so bad habit. And all of a sudden, you're not doing that bad habit. You want to stop smoking cigarettes? Smoke cigars. Then maybe stop smoking cigars, and now you're done smoking cigarettes. That might work for you. Or chew tobacco, and then stop chewing tobacco. Maybe that's harder. Maybe that's a bad example. But you got to replace fear or a bad habit with confidence or a good habit in order to have less fear, because you don't want to be fearless in a market, but you can't be paralyzed, and you can't be missing all kinds of trades because there's some little monkey on your shoulder saying, "Are you sure you want to take this? Are you sure, Jimmy, you want to get on? Remember last time you bought it here? Remember last time you put on a trade?" And all of a sudden you're dead. You're starting to think instead of diligently reacting. So let's go to this next slide and talk about the simplicity that the verbal journal allows you to use. And then I'll show you some ones from today. Missed trades, said it for the third or fourth time in this session. And by the way, this isn't going to be a super long session. We're going to jump right into Q&A and some examples and everything else. Maybe you make your missed trades red if you missed a good short trade, or blue if it was going to be a bullish trade. Pre-market ideas, I covered that. Save yourself time. Maybe it's a light shade of blue if it's a bullish bias, a light shade of red, or different shade of red if it's a bearish bias. Just some ideas. In trade emotion, you put on a trade, open up the verbal journal and talk yourself through it. Instead of internally keeping everything to yourself about all the fears and anxiety and the what ifs, say it, record it, and it's easily documented on your chart when you're done. Maybe those are yellow. Why support resistance? Everybody in here, raise your hand if you have support resistance for different reasons. Everybody does. The problem isn't the support resistance, it's qualifying it. You can't just lay bids on support and sell and offers on resistance and life is good. You ain't gonna make any money. You got to qualify the trade. Meaning it comes down to an area of support or buy zone. What's going to get you long? What's going to get you to, in real time, say, hey, this is what I was supposed to be looking for. I'm seeing it. I'm long. You're not going to be a good hitter because you watched a lot of good video of hitters. You got to read the picture. You got to read the pitch. You got to react. Real time is everybody's weakness. And maybe your support resistance and why it's support resistance are white or green lines. And I'll show you that, what it looks like on Ninja. And then confidence. All this stuff leads to confidence. You don't or shouldn't have to use the verbal journal for all this stuff off the bat. But just one thing. We just had a meeting once a month for verbal journal subscribers. We have a meeting and collaborate, and a couple people talk about how they're using it. And it's powerful because I'm not going to be egotistical to think that I know all the right ways to use and journal. I don't. I'm learning, hey, that's a good idea. In fact, this one, the pre-market idea, came from someone I never would have expected to have, hey, you know, I use this to record what my opinion is before the day. And I realized that I'm usually right, he says, and I don't trade from that side. So he gave himself confidence. So the collaborative meetings that we have is part of you guys investing in this software. All right. So I'm going to get into the promotion for Futures IO members, but it works on Sierra charts right now and Ninja Trader 7 and 8. If you're on 7 and in the future you go to 8 and you buy the Ninja, either lifetime or recurring subscription, it'll work for both. You won't have to buy it again. All right. So if you're on 7, you're thinking of going to 8, you'll get both. All right. The promotion is two things: a discount for the lifetime license and the new recurring model that we created for people, kind of lower the barrier to see if they like it. All right. So let me go to a couple of charts first, and then we'll get back to this promotion. Let me get rid of this screen, Terry, and then show these charts. Like I said at the beginning, here on the left is Ninja, here on the right is Sierra. Just a simple candlestick chart. I like footprints or number bars as they're called in Sierra. How many people are familiar with footprints or number bars? Some of you, half of you, I don't know, but when you see them, it looks like a bunch of numbers on the screen. However, you don't have to dig in and understand most of it. You just got to understand where buying and selling is coming in. But that's what this chart type on the right. This is just a simple candlestick, which I would imagine most people come into this business seeing and or using. And there's nothing wrong with using candlesticks. Like I talked about, these blue dots are missed trades that I would have had today. All right. So this one, I use more Sierra than I would Ninja. I just threw these on Ninja for example's sake for today's event. But I want to show you right in here this morning, which would have been this missed trade coming into today's session. Because in the morning, I talked about we were up yesterday because of Powell's comments at 11 Central yesterday. We sustained the strength all of yesterday. We closed strong. We opened up a few points below the previous day's close. So my expectation wasn't to come in and know which way the market was going to go. I thought that they might come in and try to sell it and take back some of yesterday's strength, not all of it, but some of it. And again, this is something that I documented. I put my pre-market stuff in white. So you see this white dot on Ninja, you have to hold control and left click and the dialog box comes up to make a new recording. On Sierra, it's a little different. I think a little easier. A little VJ button appears on the left hand or wherever you have this toolbar. All you do is have to click it, okay? And then wherever your next click is, the dialog box will pop up. It's not as dressed up on Sierra, but that's just the way it is on Sierra. Same features. So let's get rid of it. You don't have to do anything if you want to listen to a Sierra recording. So if I go in here and left click on this white dot, it's my pre-market homework. And I just used homework because a lot of people are familiar with that word. I'm not a big fan of, I think it's got a negative connotation. I think you should do a little kind of, I don't even want to call it research. I think people study too hard in the morning. I think there are certain things you should watch, but I don't think you should spend too much time trying to pretend you're going to know what the market's going to do. The most important information we need, we don't have yet, oftentimes. You want to be prepared for it. But that aside, I go back and I could listen to what my pre-market, it was about a minute long. I'm not going to play the whole minute, but let's see if you guys can hear it. All right, today's on the heels of the strength that we had yesterday with Powell's comments at 11 Central sent us up. It's a reprice session. It came from 98 even. They rallied them all the way to 45 overnight. And, okay, volume 200,000. All right, so I'm not going to play the whole minute of the recording, but it's what I thought coming in before the open, about a half an hour or so before the open. And my thought was if they don't take it down early after the open, there's going to be some rally that I wanted to be on. And I caught and scratched the first attempt, and I didn't get back on the team the second attempt. So let's go a little forward to that missed trade, and I put it in teal blue. Why teal blue? Because I don't like that color. So I want to see less teal blue dots, and that's just a personal thing. Less missed trades, the more money you're going to make. Now, if I click on this, it's going to bring up the dialog box. I titled it missed, right? If I have this, well, I'll show you this in a second, the other title that's dropped down into it. But this is what I missed, and I'll show you what I was talking about. Terry, you can hear the recording when I play it back, right, or no?
Yes, we're hearing the recording.
Perfect. All right, so I'm going to play this. It's only 30 seconds. I probably won't play the whole thing. Let's listen to it. Didn't put them back on. I was in a trade a few minutes in this sequence, and I got shook out, scratched it, seen the green edge zones come back in, actually popped it. So I knew I was going to be wrong right below those guys, around 34.50. And it just seems like it's harder for me to put these back on. You know it's going up. You know where you're out. You know where your exit is before your entry. Put them on. So that was it. It was a mistrade in Y. And lately I've been having trouble getting back on the team, as I call it. This was a rally I was trying to catch, and I bought it in here, got shook out, like I said on the recording. When I said on the recording, I seen green edge zones. Those simply are these two green markers are in here. It's just telling me the speed of the market kicked us up. Now, I don't know it's going to kick us up, but when I see it go up a few ticks, I'm like, okay, that's what I mean when I say I know where I'm wrong below. One of the first things I learned 20 years ago, in the late 90s, I took trading classes before I started trading. And the guy said, know where you're getting out before you get in. In fact, you guys do this verbal journal, make a note of that. That's one of your first notes. Know where you're getting out before you get in. I knew where I was going to get out before I get in. For a loser, that's how you manage your risk. People buy library full of books and books about risk psychology and risk management. Best way to manage your risk is to do it before you take it. Manage your risk before you take it. Have an idea where you're going to get the hell out of a trade before you get in the trade. So I had, in real time, this green came in, and I'm like, if I'm going to have this thing rally, if it's going to look like this, then it shouldn't go below these greens, and I have an idea where my risk is. But I didn't put them back on. All right. So let's go for, in fact, let's blow this up. So let's go. This is today, and this is a footprint P&F. I don't want to get into footprints, number bars, or P&F, but I do want to tell you guys one thing so you have an understanding of this chart. When I look at a chart, this is how your eyes got to fixate on it. I don't care if you use these kinds of chart types with footprints or candles or bars or whatever you're using. Just follow this pen. Rotation. That's how a market moves, right? Up, down, rallies hard, chops sideways, breaks down. That's how you have to use or visualize a chart. All right. But anyhow, let's get back into this. So let's go into throughout the day. Now I got this color dot. What is this? This isn't a missed trade. This is where I seen the market cut through this green. And in real time, this isn't something I put on, but I keep track of, you know what? I think before I know the market's going to break, what did I see in real time that gave me the sense it's going to break? What I seen was the market get hit right here, come back, rotate, respect this selling, and right now we're here. When I go one bar over, we start cutting through what should be support. See, the best thing about support resistance, if they're decent support resistance, isn't when they work, it's when they don't work, if it's good support resistance. Everybody wants to buy support, sell resistance. BS. Think of the transition when good support stops working. So if this is good support or should be where the market rotates and rallies, if you follow my arrow, and it doesn't, I put this dot in here and I call it a cut green, where the market starts to cut where it should stop. And therefore, let me play and hear what I had to say. Not only is it a long up down bar, but it's cutting through some buying that came in without any kind of problem. Could see some near-term downside. So when I say a long up down bar, this is a long bar up, and then this becomes a long down bar. And I'm like, that's transitionary from a pattern standpoint. Then it cuts this green, so I'm expecting the market to go down, and it does. So it's not like one of those things. And this is for people that are trying to know if they're reading the real time with what they're using, you know. And so if you're not going to put a trade on, at least say where you think it's going to go if it's going to make a move, so things aren't so damn random. And then when you see it working, you're only going to get confident. Remember, I talked about how to replace fear. You got to replace it with what? Confidence. You see enough of these red dots where you anticipated downside, and then you see it, you have no choice but to get confident. And these are just for example's sake of the some of the things today and how one could use it. But most importantly, I want to stick to everyone, especially if you haven't been able to put yourself in a position to be consistent from a P&L profit loss standpoint, you're probably missing a lot, and not knowing what you're missing has got to be frustrating. Okay, so this was resistance I had. Now this is real-time resistance in here. I don't remember. I'm being honest. I don't even remember now why I have that on there. So let's click watch resistance. Let's hear it. Yeah, it took out some really good buying and caught some longs off guard. Here at 36, they sent out some good old support, new resistance. Watch it. So right here is where I say they took out good support. You see where it rallies and then they have good buying and they take it out right in here. That's why I threw this up here. Now I'm not doing this hindsight. I run a room in a couple hours each morning, and guys hear me say this. Now I'm just able to document it more efficiently for myself and for others to say watch resistance. You may or may not be able to sell it there. I can tell you I didn't necessarily on here, but I kept an eye on an important area. In real time, I made this note that it should be real resistance around this 36 area because it broke good support. Simplicity, not just in journaling, but in your analysis. This is not simple to retail traders. They never get around to this kind of analysis. They don't know to recognize it. They don't know what questions to ask once you recognize what's important. Then they don't document what the hell they're doing. You see how well this thing, it worked as resistance, but forget about that. Same thing in here. This one I remember. See all this selling in here? I made this note that this should be the top of the range. It was. Here's an interesting moment, which was just around 9:30 Central today. If you trade and you don't know why we rallied in here, then you don't trade. You got to sharpen some tools in your toolbox. You don't know why we popped in here. It wasn't buyable in here, but it was tradable up around 34, 35. This was a Trump comment that he was closer to a deal with China. So two things I do with an event that moves us, and let's listen to it. This is where the comment came down the wire, trading around 32 even, where it looks like Trump says he's closer to doing some agreement with China. The market liked it. Keep an eye on 32 on the way back down. One thing, if you don't take a lot out of this webinar, take this, that when there's a big move based on a driver or some fundamental, get an idea where it started, because it generally is going to be important. If it's a piece of news that rallies the market, then it's going to be support until it's not. There's going to be some support most likely, and then when it's not support, it's a transitional moment. I'll show you what I'm talking about. Remember, it was 32 even. So we'll go forward and see how it comes back in here. Bounces off at 32 or thereabouts, rallies at 38, comes back in, and right in here uses this 32 even roughly as support again, rallies, and then right in here in the room, we got bearish. It was a lookout below moment. Let's listen. Too many tests of this 32 even area. This is where the market started when Trump had those comments come down the wire. If it was going to be bullish, why did it come back down here and test all this too many times? Look out, trying to buy this thing. Look out being long. Look out below here. Again, confidence. When you're reading real time, you know things that are above and beyond anything you read in a book, or pretty much could help educate yourself with. Number one, this became a line you didn't have known. This was a line before the markets. No matter how much research you did before the day started, you ain't going to know this is a line in the sand. It became one after those comments came down the wire. The fact that it stopped working and they started stepping through it like in here, this will not seem like a guess. You got to document, though, your opinions. Because if your opinions are probable, you'll never get confident if you're not documenting them. If your opinions are random, stop having the technique or using the skills to come up with those opinions. But that's where the verbal journal is going to not only make you money, but save you money. Miss less. So as we move through the session, I want to fast forward to another trade I missed that I generally have been good at not missing. But today I kind of sucked at it and I missed two trades that are my bread and butter. Where's this? It's not this one. It was this guy right in here. Normally I'm not trading in the afternoons. I was in front of my screen and one of my setups, a breakout setup, set up, and I just didn't pull the trigger. And I'm like, oh, It was right here, right around noon. Let's listen, and then I'll tell you what I meant. Dumbass, right here, had the greens cut, bottom of a range. You had the greens cut and the reds showing you where your risk was at. Cut that off before I swear anymore. The reds are new sellers coming in. The greens, when they start dipping below it, anticipate downside. So let me explain what I mean by that real quick, so you understand why I made a journal note with the verbal journal as a missed trade. See these greens come in? They're not just coming in a vacuum. They're coming after you start to get consolidation defined. Everybody should put visual boxes over when you get a range. Why? Because there's a fight going on in here. You got to anticipate who might win. But you got to get good at this, RT, real time. Well, what could we see that might help us predict that the sellers were going to win? And for me, it was, all right, great. I identified the box. So the sellers are going to win if they start getting below this box in here. What can I see? And I see greens come in to pop this thing. And all of a sudden, when this aggressive selling came in, it came out with a red edge zone that I call it. It dips below, cuts through this green. So I start to scratch my head, throws out a red edge zone. And this was the moment that I said, these greens are in trouble and the bottom of this box is going to get taken out. And who cares if I'm wrong? See, that'll help you miss less trades when you're not carefree, but you know you're going to be wrong sometimes and you know where you're going to be wrong, so it's not so random or you don't know where the monsters are. You're going to have more confidence to walk down a street if you know there's monsters that could jump out at you. But if you don't know where they're at, you're going to react poorly. I'm wrong up here. If I'm right, I'm going to have all this downside because this thing chopped sideways for a while, so there's going to be an extended breakout. So everything's set up for me. A recognizable consolidation in a fight, greens that came in and were starting to fail, and reds that were going to defend. And sure enough, it was a pretty effortless trade had I put it on. So I look back at like 3 or 4 missed trades, and I'm not, and I'm going to tell you guys this, I'm not going to sit here and say verbal journal is going to make you miss all 4 of these trades. But what if you just missed 1 or 2 less trades a day or a week? What does that mean to your bottom line? What if I just would have caught 1 extra one of these missed trades? Now, here's the other thing. You got to document it live or in some real time, because sometimes maybe you're talking yourself out of missed trades that are bad, and which means they were losers. Not all your missed trades are winners, but when you're right there, real close to being consistent at this business, you start to miss. Not you start to miss, but when you miss, it's the winners that you're talking yourself out of. But it's just random. It's like a bunch of Legos in a bucket that are spilled out all over unless you're journaling, unless you're documenting it. Then you start putting those Legos together and you kind of understand that, man, why do I talk myself out of this? When I have my ready, aim, fire, then pull the trigger. It's not like you're going, it's not the end of the world if it's a loser. Guess what? Every business has a cost of doing business, right? Marketing, employees, gas in your car to get to the office. For traders, it's losers. Got news for you. But if you keep them small and you get consistent so you miss less, how different does your statement look at the end of the month or at the end of the week or at the end of the session? And it's really important to miss less, but unless you document, you're not going to do that. So we're about 40 or 50, what are we, about 40 minutes in. And I'm sure there's questions, and let's get to them. Let me first, Terry, let me go to back to the promotion and tell you guys where to get more information. We also had the big, I didn't talk about this, but let me do this really quick because there was a couple big moves today that were catchable. The Trump comment that rallied and then we sold off, and then a better one where there was some teeth to a China-U.S. deal, and that came out. It's like, if you don't document this, you're not gonna be able to do the appropriate amount of homework. But that came out right here. I'll listen. Here we go again. Now these comments coming out from both sides. U.S. and China reportedly considering a deal to de-escalate trade disputes, likely would focus on delaying U.S. tariffs in return for China. So that was the second comment that had some teeth and created some bullishness for the rest of the session. I think they closed these things up into the 40s. But you see this white line I put in there? We talked about ground zero. That's where the market was right before an important event came out, whether it's scheduled or not scheduled. You think it's coincidental that it stopped here and rallied off of it? Of course not. This one is less important because it was the one earlier this morning. This one was fresh. So I gave you a lot of different reasons on how to use the verbal journal, but everyone's weakness is reading real time. It's my weakness if I'm not trading well. It's everybody's weakness if you've never traded well. And so there's not one person in this room who's traded for any more than 5 minutes that doesn't have real-time weakness as far as analyzing the market when it's trading. I don't care what already happened, what's happening. Everybody can look back and analyze what already happened. What's happening right now? And how can I build out the story and then document whether or not I'm on the right track or whether I stink? And it's easier to deal with this when you're actually talking it out. You feel better. You really do. That's why I was putting this together and I'm telling this to a psychiatrist, and he says, you know what? He goes, one of the things that we do in their profession is, if you ever seen a psychiatrist, is he said we put the patient and we get them to talk. It's not the doctor or the psychiatrist talking. It's the person there for help. So talking helps, and that's what you're doing with this verbal journal. So let's bring down the promotion screen again and get into what I'm going to do for future IO members. Lifetime license, which we had last time we did this event, but I added a monthly subscription of just $47 a month. Try it. If you don't like it, cost you 4 ticks in the S&Ps. Also, if you want the lifetime license, $150 discount code to the end of the month, which is through tomorrow for Futures IO. How do you get that? I'm going to show you in a second. You're going to get this upgraded version 2, which is everything you've seen functionality-wise today in the presentation. Plus, every last Wednesday, we do a group event, a meeting. Only Verbal Journal subscribers come to it. The next one will be in January. We're not going to do one at the end of December because of Christmas, but you also get tip videos and live meetings. So look in your chat box. Terry, I sent you a link. Would you mind sending it to everyone? Did you get it?
Yep, it's posted.
All right, so if you guys click that link, I'll go there with you right now. This is the page it's going to send you to. And it's for Futures IO members. Pop in your email address, your first name, hit subscribe, and an email will come to you with the discount code. Then you're going to go to the website, which is right here. You're going to pop that discount code in. Verbaljournaltrading.com is the name of the website. So pop in your email address, add your first name, hit subscribe, and an email will be sent to you. And then go to the website. There's some videos that are quick 1-2 minute videos that talk about some of the stuff I talked about today. And and you could take it from there. Again, it works on Sierra, Ninja Trader 7 and 8. If you buy it on Ninja, you're going to have it for 7 and or 8. I'm not going to charge you twice if you're on Ninja 7 and you eventually go to 8. Terry, any questions?
Hi guys, if you have questions, please feel free to start typing them and I'll ask. There's a question on your chart of how you filtered out the footprint green and red colors.
That's a what I call, I actually had this developed. This is on Sierra. Is that what they're asking for, Terry?
Yes.
That's called edge zones. You actually can go to emojitrading.com and since you're asking, and find out more about them. But it's an add-on through Sierra.
Okay.
That I actually had developed, and I call them edge zones. So I have, a lot of people know me from the Edge program that I have, some affiliate stuff that I've done with other platforms, but edge zones is something that I created that show where the tempo of buying and selling comes in. And then you filter them out so that you don't have too many reds or greens, but it shows you specific times where it should go up or should go down based on the speed of the buying that comes in.
Okay. There's a question about, about the promotion. Give me 1 second. Let me share it. Okay, a link has been posted in the chat, so you can click it and go to the webpage and access.
It's just going to ask you your email address and first name, and it's going to send you the discount code so that you guys could go and then use it for the lifetime. Obviously, the discount code is not going to work if you do the monthly. The monthly is only $47 a month, and if you guys do the monthly and you like it and you want to buy it lifetime, I'll knock that $47 off the first month so you're not paying that extra. I'll do it for you Futures IO guys, but just remind me of that after your first month. So this is something that it's like, you know, when it's a $400 or $500 product, you got to think about it. Am I going to use it and everything else? And I could just tell you from the people and the feedback I got, they use it and they like it. Now, if you're like, I don't know if I'm going to use it, do it for a month. And it's like, but focus on using it for one thing. You have to use it for missed trades and pre-market bias and transitional moments and all this stuff. You can, but just use it for one thing, and you'll find that now your ability to study the market during and after is so much more efficient than taking all kinds of notes. And I guarantee you, most people don't take all kinds of notes because it's not practical to write down, or look at statistics. Here's one other thing I want to mention. It's one thing to analyze the trades you take because you took them, right? And you could go through those statistics. But your missed trades don't come up in those stats, do they? Because you didn't take them. You can't analyze missed trades on your statement or any kind of technology. It's going to say, oh, average winner, average loser, how many trades per day, what average size, all this. That's great. There's some good analytics that could come from that. But what analyzes trades you don't take? This does.
Okay. Are the audio recordings stored locally or in the cloud?
Yes, locally.
Okay.
That's a good question. So, and they're just saved as WAV files. And so, oh, here's another thing, and I should have brought this up. They're on different periodicities, and so you'll see this on videos on the website. But like this is, let's go back to Ninja for a second. This is a 5-minute Ninja chart, and you see the 3 blue dots I have on it. So let's say I go to a 15-minute chart. What's going to happen? They're still going to get saved. They're just going to obviously be in different positions because it's a 15-minute, but same time and same price. So they're always, if you have the verbal journal on a chart, you don't necessarily want the verbal journal on every one of your charts. So it doesn't have to come up on all your charts. But if you want it to come up on 2 or 3 charts, it'll get pulled locally, and so it will refresh, and you can see some older ones that are in here from this rally. So it's like it'll work on multiple periodicities, time frames, and chart types. You know, if you've got number bars for Ninja, it'll pull them into that as well. So you don't lose them unless you want to delete them.
Okay.
Then you delete them.
Can you share any of the feedback that you've gotten from the current users? Is there anything that really
Actually,
sticks
I
out to
can't.
you?
Yeah, a couple things. Go look at the review that you guys have up in the thread, because those are members of Futures IO. One guy was a tester early on, and then the rest of them are some of the people that bought this thing after the first event that I did about a month or 2 months ago with you guys. So that you could actually read. From the event, I got a lot of feedback at the first event we did yesterday, and actually a guy's talk at it. The guys that two things that they really like: transitional moments. So, for example, when a market, and this is always important to stay on top of, no matter what you trade, the market is strong and then it gets weak, right? Where in this sell-off can you say the market went from bullish to bearish? We call them B to B bars, B to B, either bullish to bearish, bearish to bullish. So it's really important in trading is to know when a transition might be taking place to keep yourself from remaining on the wrong side. So this is the upside, the right side's the long, and then all of a sudden something happens in here that creates a probability to the downside. So one example was feedback of someone coming and saying the confidence that he has at changing his opinion with the market has been exponential, because he's documenting it with the verbal journal. He's putting dots where he thinks the market has changed its mind. And we also talk about, it's not your opinion, it's the market's opinion. Stop making it so personal. We're talking about how if you say the market is now bearish, not me, not Anthony, not John, not Jim, the market is. So by documenting that, he says my confidence is just like I'm usually just always right, and now it's just a matter of the location. But he said I never really focused on that. So that was one example that stuck out. A couple people will talk about, that's why I kind of focused on missed trades, because they were not only missing good trades, but they found that the next trade they took after a missed winner was usually a loser. Because when you miss a winner, what do you feel like? Crap. You're anxious. Your mind's trying to get you to do something to make up for that. It's like making an error in the field. You try to overcompensate in athletics. So when you miss a winner, you know it, right? It's somewhere in your head. And you kind of force and you try to find something that's not maybe there. So that was like one dimension of a missed trade. And he says, it's kind of like what I had come back and said, if you're not going to catch all the trades you miss, but if you could catch a few, it changes your whole kind of your whole bottom line, your whole profitability. Especially guys that are like right there. I'm sure there's a lot of people in here, and Tara, you talked to a lot of traders part of this forum, that they're not consistent, but they're closer than they think. Or sometimes they know they're right there. And it's only a few trades, even in a week, not a day. That's the difference between making money and not making money in this business. Missed trades, I'm telling you, focused on the MT, the missed trades. Anything else?
All right, that looks like it. I'm going to ask this question. Is there any ideas you have brewing for your next version update? Maybe things in the future that might be coming down the pipeline?
That's one thing that the lifetime people will get, is the next upgrade. What I did as part of the collaborative efforts and staying in touch with the people that do it, and I'm kind of a different vendor because I'm not a vendor by nature. Growing up from the exchange and then in through a prop firm community, the approach I take is more of a community or group approach. So I'm actually I learned a long time, if you want to be important, you got to be available. So I like bringing people together and listen to what they want, right? So one of the upgrades we're going to have that's going to be given as part of the people who do it this year is creating remember when I talked about, here, let me actually show it, Terry. So let me go, let's say we want to put a note up here. So you hold control and you left click. The box came off there. See, the box will reappear wherever you last closed it. All right, so let's say we're going to make a note. Let's start it again. Hold control, left click, here's the box. Color's going to be orange. Well, we don't want to put missed as the title. We want to use our previous title, morning briefing, right? And you hit record and you start talking. Now, my previous title is morning briefing. I want all my morning briefings to have the same color and whether or not it has a line. So I want all my resistance to always have a red line in the red color. So it won't just have, the logic will be the, so you don't even have to change the color or the line if it's resistance. It'll stay tied to the title. So that's one. That's one of the kind of additions that we're going to have to it. There's two more, but I don't want to get into it. And I'm not trying to be like, oh, it's just kind of some IP that I don't want to divulge at this point where kind of it's going to be. But the people that are the early people in the first few months and everything else are really going to be exposed to a lot of stuff that's collaborative other than just, helping themselves. But that's as much as I would tell you now is the immediate future.
Okay. There's one question that slid in about, he says he got the email with the codes. I don't see a link to purchase the indicators. He says, I'm new. Perhaps you can explain how to add the indicator to Sierra chart.
Well, after he gets it, it'll have the instructions. I should have put the link in the email. It probably should have been in there. But give him, if you don't mind, verbaljournaltrading.com. Here, I'll give you the link. You could just copy it over.
I just posted it.
You got it? Verbaljournaltrading.com. Go to the website, whoever asked that question, and scroll down, click checkout. Here, I'll show it to you. Here's the website. Go to it, click, scroll down. If you do the monthly or the lifetime, if you're going to do a lifetime with the discount code, click lifetime. It'll take you to the checkout page. You're going to want to click and add the discount code. Once you do that and hit apply, it'll change this price accordingly. It'll show $150 less. You'll see it in here. Fill out your information. And then once you do that, you'll be forwarded instructions to load it to Sierra. Sierra, in my opinion, they're both easy. It's just the biggest difference is all the instructions on not only how to download it, but also how to use it are all in tutorials and emails after you make the purchase. What's neat about Sierra is all you gotta do is hit the VJ button and click, and the box comes up. And wherever you clicked is where the dot will appear after you make a recording. Also, if you don't make a recording, a dot's not going to left behind, which is good, so you don't have empty dots all over. But so with Ninja, you have to hold control and left click, and the box comes up. Sierra, you just hit the VJ button. But all those instructions are pretty easy. In fact, I put the instructions together and had my wife, who's never traded or knows what a chart is, I had her follow it. She was able to do it. So then I knew they were pretty decent. Don't tell her I said that.
Okay, that's it. Thanks for the webinar, the information, and for spending some time with us this evening.
My pleasure, Terry. You guys have a good night, and thanks for coming. Hope you guys see you in the community. Again, when you do this, you'll get an email in a couple weeks also from me inviting you to the monthly events. And as they go, as we get more, I had a really good group yesterday. More people came than I thought. So usually when you get X amount of people register, and you know this, Terry, around 40% come. I had like 80% come. So there was a lot of buzz around it, which was great. And we might do 2 a month. So you'll get invited to that after you make the purchase, and kind of get going. So there's also a support at verbaljournaltrading.com. And if you got any issues, get a hold of us and we'll get set. But we've had very little issues in the first go around. But thanks again, and we hope to see you guys soon.
All right, thank you.